Boom shakalaka, what is going on, everybody? Randall here from Crypto Love. Today's episode, we are going to be talking about the Bitcoin halving. Taking a look at what is the Bitcoin halving, what can you expect from the Bitcoin halving, potentially some price predictions for the Bitcoin halving. We'll be taking a look at all of that because guess what? It's just 6 months away. So in this episode, we're going to take a look at that, where it's mentioned in the white paper, some things that could happen with Bitcoin price according to the halving, also everything you need to know about the halving, also how scarcity affects the halving, also 17 trillion reasons why the halving is going to be good for Bitcoin, and furthermore, some Bitcoin halving predictions. So if you think that's exciting, then you should definitely check out this episode. Alright guys, now Bitcoin is about to have another halving in about 6 months. May of 2020, sometime May of 2020. Expected date May 14th, 2020. That could change a little bit. It basically, the blockchain halves at every 210,000 blocks. So it's estimated that that will be May 14th, 2020. Now what is a halving? Well, it's a pre-programmed in reduction in the block reward for the Bitcoin blockchain. What does that mean? Well, every 10 minutes, a new block is formed. And in those blocks, the miners validate transactions on the Bitcoin network. Now, the first transaction of that block is called the Coinbase block, not associated with Coinbase, the website, but that Coinbase block rewards the miner for mining that block. Well, initially, when Bitcoin was created, miners got 50 Bitcoin per block. Then, November 28th of 2012, it dropped by half. That was the first halving. It went from 50 Bitcoin per block to 25 Bitcoin per block. Then the second halving was July 9th of 2016, where it went from 25 Bitcoin per block to 12.5 Bitcoin per block. And guess what? Coming up May 14th of 2020 is the third halving, where the reward will go from 12.5 Bitcoin to 6.25 Bitcoin per block. Now this is a big halving because if you see down here, the actual inflation per year of Bitcoin right now at 12.5 Bitcoin per block is at 3.71%. But after the next halving, it'll be at 1.8%, which is lower than inflation on US dollars. That'll be the first time this is happening. So that's why this is a very important halving coming up. Now, Satoshi actually talks about the halving in the Bitcoin white paper. So if we take a look at this, we scroll down to number 6, which is incentive. He talks about how with the blocks being formed, miners are rewarded in coin for the creator of the new block. But he talks about how the incentive can also be funded by transaction fees. And he says once a predetermined number of coins have entered circulation, the incentive can transition entirely to transaction fees and can be completely inflation free. So basically he talks about the transition from incentives in Bitcoin to incentives in transaction fees. That transition he's talking about is actually the halving taking place every 4 years up until 2140 when all the Bitcoin are mined. And that point, there will be no more halvings. There will actually be transaction fees that the miners will get as their incentive. And at that point, Bitcoin will be completely inflation free. And we're going to take a look at how deflation actually helps increase the value of assets. Now, taking a look at price and what's going on with price. Well, this is Bitcoin Liquid Exchange. Okay, since 2010, this is the Bitcoin price. Now, what I've done here is these blue vertical lines. These are the halvings. So the first one, 2012, the second one, 2016, the third one, 2020. They occur about every 4 years. And if you take a look here, these white dotted lines, these are the all-time high prior to the halving. And guess what? If you take a look at this all-time high prior to the halving, before or at the date of the halving, Bitcoin doesn't tend to break that all-time high. So back here in 2011, the all-time high was right around $35. And guess what? At the time of the halving, Bitcoin was only $13. So it didn't break through there until a couple months after the halving. Same thing happened with the halving here in 2016. So the all-time high was actually back in 2013, the end of 2013. And that price then was around $1,200. Well, guess what? At the time of the halving, the price was only about $659. So it wasn't until actually 7 or 8 months there that it broke through that all-time high again. So we've had an all-time high, $20,000, and where we are right now, around $8,000, $9,000, probably won't break through that $20,000 before the halving, but potentially afterwards, 2 to 6 months, maybe a little bit more, we could break through there and see new all-time highs. Now, what I've done down here with these the red lines and the red numbers is just give you an idea, visual representation of how many Bitcoin were created in each of these periods. So initially, 50 Bitcoin were created, then it dropped by half to 25 Bitcoin per block. Then it dropped by half again to 12.5 Bitcoin per block where we are now, and soon is going to drop to 6.25 Bitcoin per block. Now, the interesting part is right here, these green boxes that I created. Now, these green boxes expand 1 year before to 1 year after the halving. So, taking a look at the price, there is all of these, a pretty significant price increase from 1 year before to 1 year after the halving. So if we take a look at the first halving, the price was about $2.36 before and $1,178 after. So that's an increase of 487 times in that first halving. The second halving, price about $192. At the end, about $3,000, okay? 15x in price. But if you take a look at the time of the halving, the price had only gone up 5x. The price had only 5x'd in the first halving. The price had only 3x'd in the second halving. So if we take a look where we are right now, the price is only 1.5x up from the bottom at 1 year before the halving where we are right now. And as to where the price would go, well, potentially, I'm just saying, you know, this time the all-time high was a little bit low. This time the all-time high was a little bit high. So this time we'll put the all-time high in a little bit in the middle of the halving here of this box. So that could put the price right around $60,000, which could bring 10x returns, potentially. Now, these are all just speculations. I don't know what the price is going to be, but this is what I think. We will take a look at some price predictions later. So there is this really good article on Bitcoin halving by Rect Capital. I will put a link to it down in the description so you can check it out. He just talks about basically he goes in depth taking a look at the first halving, the second halving, and then comparing both halvings. He says that Bitcoin halving is a key catalyst at the beginning of a new Bitcoin bull market, which is awesome for all of us. That's all what we've all been looking for. Also, he says Bitcoin has rallied between 12,000 and 13,000% in each of its halvings to date. So those are some interesting things to look at. I'll leave it to you to read the rest of that article. So talking about scarcity, because this is one other thing. So halving is important. Vitalik, when he was writing for Bitcoin Magazine, he said this thing. He says the main reason why this is done, which is the halving, is to keep inflation under control. One of the major faults of traditional fiat currencies controlled by central banks is that banks can print as much of the currency as they want. And if they print too much, the laws of supply and demand ensure the value of the currency starts dropping quickly. Bitcoin, on the other hand, is intended to stimulate a commodity like gold. There's only a limited supply of gold in the world. With every gram of gold is mined, the gold still remains harder and harder to extract. As a result of this limited supply, gold has maintained its value as an international medium of exchange and a store of value for over 6,000 years, and the hope is that Bitcoin will do the same. So, if we take a look, what he says here is that the problem with fiat currencies controlled by central banks is that banks can print as much of the currency as they want, and if they print too much, the laws of supply and demand ensure that the value of the currency starts dropping quickly. Well, let's take a look at what he says is true. If we take a look at the US dollar, the purchasing power of the US dollar from 1913 until 2013, funny enough, 1913 is the year that income taxes were created, so that's when they started stealing our money. Well, look at that. Ever since 1913, when the Federal Reserve was created, the value of the US dollar has dropped significantly to right now it's only 1/20th of the purchasing power it had 100 years ago. Yikes. But if we take a look at the purchasing power of the US dollar versus the purchasing power of Bitcoin, look at them. They're completely inverse because guess what? The US dollar is inflationary. Bitcoin is deflationary. So it would only make sense that they would do opposite things when we take a look at them. Now there's this other article, I'll post this down in the description, modeling Bitcoin's value with scarcity. This is a good one. It takes a look at the stock to flow model. Now the stock to flow, for those of you who don't know what that is, that basically looks at the amount of an asset on hand, like stocked up, versus the new amount flowing in. Okay. Now gold has a very good stock to flow model because there's a lot of gold piled up, but the amount flowing in is very small. whereas other precious metals like platinum have a very small stock, but there's a lot flowing in. Now, Bitcoin, because most of the Bitcoin were mined very early on, has a lot of stock, and the flow keeps decreasing because of the halving. So if we take a look at stock to flow models, we have things like this that predict Bitcoin prices growing and growing and growing. And if we take a look here, this is a really good quote. People ask me where all the money needed for a $1 trillion Bitcoin market value would come from. My answer, silver, gold, countries with negative interest rates, which is Europe, Japan, and the US soon, countries with predatory governments, Venezuela, China, Iran, Turkey, billionaires and millionaires hedging against quantitative easing, and institutional investors discovering the best performing asset of the last 10 years. Particularly this last line, institutional investors discovering the best performing asset of the last 10 years. Now, why is that important? Well, it's important because of this. Cameron Winklevoss tweeted this about a month ago. He said $17 trillion are currently held in negative interest bonds. That means 17 trillion reasons why you should own Bitcoin. So, what's a negative interest bond? Well, let me put it to you this way. You buy a bond. You pay $100 for a bond. This bond takes a few years to mature. Guess what? When it matures in a few years, you get $99. Who the fuck would do that? That's retarded. That's just stupid. Why the fuck would you put your money in an investment for years to get out less money afterwards? That's the exact opposite of what an investment is supposed to be. So guess what? There's $17 trillion held up in these negative interest bonds. Guess what? When those bonds mature, people are going to be looking for the best performing asset of the last 10 years, which in case I need to tell you is Bitcoin. Now, I know I've got rose-colored glasses. Maybe I'm just not seeing things right. So I'm going to give you some reasons for skepticism. So first, some people argue that the halving price is already priced in. So basically, they think that the move from $3,300 to $12,000 was for the halving, so the price is already hedged in there. So maybe it won't go up anymore. Second, models fit until they don't. So we talked about the stock to flow model. We talked about some other model. Those fit until they don't. So maybe that's wrong. Also, industry insiders hinted that the halving could have negative results if it reduces miners' profitability and forces the smaller ones out of the market. So this actually happens. And this is what happens at every halving. It's a miner shakeout. So the least efficient miners actually have to quit mining because what happens is they get rewarded less. They have to do the same amount of work and they get rewarded half as much. So if they're paying a lot more for energy, they're going to have to stop doing it. Also in traditional markets, price is rarely a function of supply. It's more influenced by demand, which the stock to flow model does not take into account. So therefore, if people actually aren't interested in Bitcoin, then guess what? They're not going to do it. But as we saw, there was a recent poll in America where over the past year, the number of people owning Bitcoin doubled from 7% to 14%. So as it appears in America, the interest is increasing. America most likely like other countries around the world. Now, the thing that you're all probably looking forward to, 4 Bitcoin halving predictions and why exactly they predict these numbers. So, first prediction is Plan B. Plan B says $55,000, basing it on the stock to flow model that we took a look at earlier. So, awesome. That's pretty cool. Bitcoin's at $8,000 right now. And $55,000 would be awesome. Now, second one would be a Reddit user by the name of Lemon Mule taking a look at the graph that includes bull market, bear market, accumulation, expansion, and reaccumulation. This is the graph that I posted on the thumbnail, in case you guys saw that. Well, if we take a look at that, he says $144,000 based on this one. That's pretty damn exciting. And the third one, Canaccord Genuity, returns to all-time highs of $20,000. So there are 3 ideas of what will happen with the price by the halving. My ideas, now, obviously, I'm not saying this is what's going to happen. I say this is possibly what will happen. I don't think that $20,000 will be broken by May of 2020. However, by a year later, yes, I think it'll be broken. I would say potentially we could be in the $60,000 area after there. I would love for it to be higher. I do think that the price could definitely go higher than $60,000 if it breaks the $20,000 all-time high. because that'll cause a feeding frenzy. All the weak hands who got out then, they'll be like, no shit, it really is real. And then the price will go up, and then eventually the price will come down, and then the price will go up, and then the price will come down. And that's kind of what happened. So guys, that's it for the Bitcoin halving. I just want to make this episode for you. You guys requested it. I made this video for you. I hope you enjoyed it. I hope you learned something. I hope you can understand now a little bit more about the Bitcoin halving, how it affects the Bitcoin price, and what to look for in the future. So thank you so much for watching. Make sure you check out the Monarch wallet, which holds Bitcoin and 3,000 other cryptocurrencies, and earn up to 10% interest on your cryptos while you hold them in there. And also check out Monarch Pay, the world's first decentralized recurring crypto payments. Thank you for watching. I'll catch you later. Love you. Peace.